Good evening, ladies and gentlemen. Welcome to yet another Mango Spaces session where we will take a deep dive into reverse invoicing on eTIMS, look at what it entails. We've covered under the reverse invoicing. We look at the actual stepwise process of doing the reverse invoicing and probably also look at some of the challenges that taxpayers have been facing. But before we go deep into that, my name is Joe Moniki. I am a tax practitioner. Together with us today is Mr. Kane, who will be our key speaker for tonight, and they will come with the technical expertise on implementation of teams, e-teams, and guide us on what a reverse invoice entails. I will allow Kane to introduce himself and also to give us his professional background in terms of tech and what they have been doing with this firm in terms of implementing electronic tax invoicing. Kane, over to you.
Thank you. Good evening, everyone. Happy to be on Mongo Spaces today. As has been mentioned, my name is Kane. I am the CEO of Digitax, and Digitax provides software solutions for eTIMS. I'm looking forward to the discussion, and hopefully we'll have an engaging session with the participants and the audience today. Thank you very much.
Thank you, Kane, for that short introduction. So, ladies and gentlemen, allow me to give you a background on reverse invoicing, and this is tied to the electronic tax invoicing, a mechanism that was introduced by KRA. You know about the changes that came about in the Tax Procedures Act, Section 23, requiring taxpayers to issue electronic tax invoices, and tied to that was Section 42 of the VAT Act, which was amended through Finance Act 2023, requiring all suppliers to issue electronic tax invoices for all their supplies, goods, and services. And over and above that, there was a change introduced on Section 16 of the Income Tax Act, now expanding the scope of electronic tax invoicing to income tax as a tax head. And basically, that change on Section 16.1 of the Income Tax Act indicated that all expenditure that will not be supported by an invoice generated through eTIMS will not be allowable for income tax deduction. And then over and above that, there was a change that was introduced in December 2024 on the Tax Laws Amendment Act. And basically, the change in the Tax Laws Amendment Act was to allow instances where one is dealing with an SME, which is not able to implement eTIMS, allow the buyer in this case to be able to do what we call the reverse invoicing or buyer-initiated invoicing. So that is the background on how reverse invoicing came about in terms of the legal background. But then tied to that, you all remember that last year, November 2025, that KRA issued a public notice saying that from 1st of January 2026, KRA will be doing the automated validation of expenses and income, basically meaning that any expenses or income that is not being passed through eTIMS will not be allowable or will not be admissible when filing your income tax returns from the returns of the year ended 2025. And so looking at that, there's been a lot of panic and discussion on how taxpayers can be able to bring as much of their expenses as possible within the eTIMS scope. And so one of the solutions that you are able to bring your expenses that have been supplied by people who are not registered on eTIMS is through reverse invoicing. Now, Kane has a lot of experience with the whole topic about eTIMS. That was just to give you a glimpse on the legal framework regarding our topic of discussion today. And so, first question to you, Kane, is maybe just to explain to us how reverse invoicing works under the eTIMS framework, that tech, and also in terms of supporting taxpayers who are also not tech savvy.
I'll touch on reverse invoicing and also something closely related called buyer-initiated invoicing. So as you've correctly stated, reverse invoicing is a mechanism where the buyer can issue an invoice on behalf of the seller. And of course, this is ideally in scenarios where there is a valid or good reason why the buyer needs to generate the invoice on behalf of the seller. Conversely, there's also buyer-initiated invoicing. It's the same thing. The buyer can issue an invoice on behalf of the seller or the supplier, but the key difference is the buyer-initiated will always need the consent of the supplier. So if I issue a buyer-initiated invoice, the supplier or the seller has to approve each and every time the transaction is done. With reverse invoicing, it's typically a one-time consent. And once that approval is given by the supplier, then the buyer has freedom to issue an invoice as and when is necessary. So they achieve the same thing, just distinct and different approaches. But the overall objective, of course, is to make sure the buyer has the comfort of being able to have an invoice against that expense as and when it happens. Of course, with the rollout of electronic tax invoicing, one of the things that has come up is, can I always rely on my supplier or the person giving me goods or services to issue an invoice in a timely manner with the correct information and in a way that gives me comfort that it's a genuine tax invoice? And as this has been rolled out, of course, there's been quite a bit of news around it. There's a famous case of avocado farmers who are reluctant to issue invoices. There are those who cannot do it for genuine reasons or practical reasons. And this is essentially a way to remedy that, but still ensuring that there's a paper trail and an electronic tax invoice at the end of every transaction. So that's a summary of the two methodologies.
And maybe to add to that, maybe you let us know who is covered or what does this law cover, or what scope of taxpayers does reverse invoicing cover?
So I'll start with reverse invoicing and then I'll also talk about buyer-initiated invoicing. Reverse invoicing, it covers anyone who has a long-term ongoing relationship with their supplier. So if you're a buyer and say you're dealing with a farmer who you've contracted for, like sugarcane, for example, or you're an insurance company that has agents who you regularly pay out commission to, then you'd be an ideal candidate to consider reverse invoicing. And the key test is the ongoing relationship. Is it long-term? Do you do regular payments? Can this relationship be verified via a contract or some kind of paperwork to show that there's an ongoing arrangement? And is there a genuine reason as a buyer the supplier cannot raise an invoice for themselves? Why do you need to do it on their behalf? So there's also an approval process. So even if you wish to have reverse invoicing, you must state your case as a buyer to KRA and explain to them why you need it. They will then review and assess whether you are a legitimate case for reverse invoicing. And then from there, they'll take you through the steps of understanding your process, your contracts, or the agreements you have in place with your suppliers, also the methodology of the system you'll use to generate the reverse invoice. And then after all that is done to their satisfaction, they can then enable you for reverse invoicing. So there's a process, it's not automatic. Buyer-initiated, on the other hand, is much more straightforward. This can be done through eCitizen. You log in, essentially load or fill in the data of the supplier. And then when you submit the details, the supplier will get notified and then they would approve on their end. Once they approve, the invoice is then generated. That has a lot less process and approval to it because it's more freely available and can be done through eCitizen. The difference or the consideration is how often do you engage with this person? Do you always need them to approve? Or how many people do you need to approve? Are there a large number such that reverse invoicing makes more sense? So that's the mechanics around how one can use either of the options.
Thank you, Ken, for that clear distinction on who is covered within reverse invoicing and buyer-initiated invoicing. Now, when you look at these two, they are all tied to electronic invoicing. And so, Ken, from your experience from 2022, when KRA started enforcing electronic invoicing, you can maybe try to paint a picture to us what these two mechanisms are trying to do in terms of bringing all taxpayers within the scope of eTIMS.
If we go back to even before eTIMS, when we had TIMS, the predecessor to eTIMS, some key distinctions are: one, it was hardware based. So you had to invest in a device or some hardware to generate the tax invoice. And then it was only targeted at a particular set of taxpayers. So those who are VAT eligible, which is generally a threshold of 5 million shillings and above per year. Now, eTIMS as a policy came out in January 2023. And since then, of course, a number of things happened to bring us to where we are today. So the first one was the laws and the regulations tied to e-invoicing were contained in the Finance Bill of 2023. So that was step one. Step two was also then just the policies and the mechanisms that Kerry put in place to enable it. And then, of course, thirdly was now the systems and the tools that enable electronic invoicing. Now, as part of that process, the important thing is a decision was also made that this will not just target VAT taxpayers or large taxpayers. It will actually target each and every sector of the economy. So in an effort to expand who is compliant or who needs to be on a system, Kerry and essentially the government, but through Kerry, made the decision that this will cover all tax categories. So if you think about that kind of taxes, you'd pay turnover tax, income tax, of course, there is VAT as well. All these are to be covered under electronic invoicing. And so that's a background to how this suddenly became something that everyone needs to be aware of and make arrangements to comply. So when this was rolled out, of course, there was an onboarding period and people to get familiar with it. So the rollout officially happened in January 2024. And that's, of course, now when we had many people using it. A lot of feedback was being shared, what's working, what's not working. And of course, one of the things that came up is there are very many people who are new to engaging this way from a tax engagement or tax compliance perspective, in the sense that maybe typically you only did a declaration once a year and you find annual returns. You're now being asked to generate an electronic tax invoice for each and every transaction that you take. And there's also the question of how do I make sure I become compliant? Which tax categories am I liable for, and so on and so forth. So there are all these questions that came up when the rollout eventually happened. And of course, one of the learnings was not everyone is comfortable or aware of how they should go about filing their electronic tax invoices or entering that data. So what ended up happening was there are many people who then reached out and said, hey, this is new to us. If we don't fully understand, please help us think through how this should work. So at that point, it then became imperative that other alternative mechanisms are sought to ensure that those who have challenges or where there are gaps, those can be addressed. And hence now where that whole discussion around enabling the buyer have a role in generating the invoice comes to be. So from there now, Kerry came up with recommendations. Of course, this made their way through to Parliament, where they now made those amendments around reverse invoicing. And now following that, systems and policies and procedures were put in place. So the first one that was launched was now the buyer-initiated invoicing that was launched on eCitizen. And recently in the news, Kerry did share some numbers around how that is faring. So quite a number of businesses have taken it up and quite a number of transactions have been enabled in that manner. And where we are today is, of course, now for those buyers who feel that it's imperative they engage with their suppliers and proactively get this tax invoice, they're using buyer-initiated invoicing. For those who feel that they want something more long-term and something more streamlined, they'll then opt for reverse invoicing. Of course, there's a bit more process to it, but ultimately, the whole idea is the buyer has comfort that anytime an invoice is generated, they're able to have comfort that they have the electronic tax invoice. Of course, the big thing that also is being looked at here is a governance and risk matter, because ultimately, what you're doing with reverse invoicing or buyer-initiated invoicing is you're generating an invoice on behalf of the supplier. So you're creating a tax obligation for them. And so it's important that a few principles are always kept in mind around awareness. Has the supplier been informed? What are the implications of this in terms of in dispute, how is that handled? Which is why you see that a very deliberate attempt is being taken in how this is rolled out, and it's just not being made available to anyone on a wish to have it basis. So there's also a balance between convenience, but also protecting the taxpayer from exploitation and tax obligations that they may not be aware of.
Thank you, Ken, for that clear elaboration on what KRA was trying or attempting to cure through evolution of eTIMS to where we are in terms of the buyer-initiated invoicing and the reverse invoicing. The next question to you, Ken, is, and this has been a concern from members of the public, many of whom may not be coming from the business or accounting industry or may not be tech savvy to understand how this affects them and how they are able to onboard to eTIMS and use the various mechanisms available to be compliant. And the concern from many people, and I have seen that a lot on social media, is that it appears that there is a deliberate move to rush implementation of eTIMS in terms of the old infrastructure and the different mechanisms that KRA has come up with, and now looking at the mandatory, validation of expenses and income. In your opinion, and as an expert who has been involved in this implementation, would you say that eTIMS, from a policy perspective, has been rushed into implementation? And maybe you can let us know whether you have perspectives on how other jurisdictions have implemented this electronic invoicing. Okay.
It's an important question. And of course, there'll always be different perspectives. But yeah, a few thoughts on this. So firstly, in terms of speed, I think the whole idea here is the more eTIMS is in people's hands, the more you'll understand the challenges. Remember when I said earlier, there are those who already were on some kind of electronic invoicing system, TIMS, and for them, the transition has been fairly straightforward. In fact, what happened is KRA gave them a transition period where if you're already on TIMS or you had the device, you did not need to transition to eTIMS immediately. And that is still the case. So that's why you'll go to many shops and you'll still see people printing electronic invoices with a physical device. So that's one of the things they tried to do to mitigate. Now, for anyone, of course, who was not on VAT, this is quite new in the sense that electronic invoicing is not something you've done before. And as was mentioning earlier, you're going from having to do one filing a year maybe to having to issue an invoice for every transaction. Now, some of the things that were done to try and mitigate this transition is making available various options. Of course, today you have eCitizen. Separately, KRA have their own free online platform. In addition to that, they have a desktop version. They also have an Android app. And of course, if you wish, you could also work with an integrator like Digitax if you need specialized help or you feel for a reason or another, a solution offered by the private sector. So those are some of the considerations in place. The other thing to note is with any new solution, there'll always be teething challenges. I remember very early on, there was quite a bit of downtime as many people came onto the system, but that's largely behind us. You hardly hear of eTIMS having any unavailability. And the other thing, of course, it's also important to remember when this was launched in 2024, it's essentially been 2 years of onboarding or getting people comfortable with it. It's only in the last week that a much more stronger position has been taken around ensuring every transaction has a tax invoice. Now, of course, as we learn more and as more people come on board, the whole idea is you want to balance compliance versus flexibility and optionality. So what we're discussing here, like reverse invoicing, is a response to learnings, but those learnings can only come once people use it and you identify the challenges and the remedies. So those are some of the things we think will actually be important to note moving forward. There'll always be a balance between how quickly should we roll out vis-a-vis roll out to as many users and find out the issues and fix the issues. So it's still a journey. I don't think any of us can say where we feel things are at the end. We are fully comfortable as all the stakeholders, KRA included. And I think that will be part of some of the things that will inform any future changes. The more people use, the more feedback you get, the more you improve, and the more you streamline the process. I like looking at it like positive optimism in the sense that more and more people will get comfortable over time. And then remember, there are many solutions in the market. So if you think about all the licensed entities vis-a-vis the options KRA offering, it's just then choosing which one you feel makes most sense for you. So in a sense, it's an open market for you to choose the solution that you feel will be the most streamlined and easiest in making you compliant.
Thank you, Kane, for sharing on your insights in terms of whether this has been rushed. And it's important to note that you shared how KRA has given different avenues to implement eTIMS so that the end game is that no taxpayer is locked out. Now, my next question is, we know that digital operates in different countries in the region. Maybe you can give us your experience in the other countries in the region in terms of the implementation of electronic invoicing and how that has worked out.
So present Digitax is in 3 countries. In addition to Kenya, we are also in Zambia and we are also in Nigeria. For us, one of the main benefits has also just been understanding how different countries and governments in Africa are thinking about electronic invoicing. And it's not just those 3 countries. Right now, from our research, majority of African countries are either implemented or are implementing e-invoicing. The same thing is happening in other regions of the world. One of the most interesting areas right now is the Middle East. They're very big on e-invoicing and implementing it in the coming months and years. And also Europe. Europe is yet to get to the level of where we are as Kenya. And the markets are in terms of real-time e-invoicing. But they want to go that journey in 2027 all the way through to 2029. The first part of the world to do electronic invoicing at scale was Latin America. So they led the way maybe 10 years ago. And now, of course, Africa is doing it. Parts of the Middle East and Asia are doing it. And then you'll have Europe and maybe one day North America as well. What we've seen is similar in the sense that governments take a similar approach. They come up with a policy, they pass the laws, they avail a system, and then they invite companies to come and get licensed in addition to their own solutions. So if you look at Zambia and what the Zambia Revenue Authority is doing, Federal has taken an almost similar approach to Kenya. They have their own options, they've licensed companies. But the main difference is maybe they've not targeted all taxpayers the way Kenya has. So they have focused more on the VAT taxpayers and turnover tax above a certain threshold. Nigeria has also taken a phased rollout approach. So they're starting with large enterprises, those doing maybe about 400 million in Kenya shilling equivalent in terms of annual turnover and above as a first phase. But the goal is to quickly roll this out to all sectors of the economy, just like Kenya is doing right now. So what we can say is the good thing is the support once his government is putting towards this is very encouraging. They invest technical resources, they invest in people and the time to train. Of course, one can say they have an incentive because it's helping them collect money. So it's not typical to your other rationales for government making certain decisions. But since you're helping government collect revenue, they tend to give e-invoicing a very strong support. And we have seen that in Zambia and Nigeria so far. The other learning also is it's always important to ensure that there's enough awareness and enough information for taxpayers to absorb as this change happens. It's also interesting that similar to Kenya, where Kenya had a grace period to get people comfortable with it, Zambia has taken the same approach. Nigeria has taken the same approach. So there will be a launch date, an onboarding date, like an acclimatization period or grace period, if you will, before more stringent enforcement begins. And so since those countries are started the process after Kenya, they're still in that phase where they are encouraging rather than having strict enforcement measures or strict fines around compliance, but they're really encouraging the taxpayers to onboard and avoid a last minute rush. So yeah, that's what we are seeing, and I think that's what we'll continue to see. And in all of those markets, you find a similar number of companies showing interest. So if you look at the companies that have been approved in Kenya, a very similar number have been approved in Zambia. A very similar number have been approved in Nigeria. So it's continuous in that sense. There'll always be people who want to offer solutions to the market. So they're taking a market-based approach rather than everyone connecting to a central government portal, because I think they're also cognizant it can become very overwhelming for them.
Thank you, Ken, for that perspective in terms of what other markets are doing in terms of electronic tax invoicing. Maybe for those who may have joined us late, Ken, you can help us understand the practical step-by-step method of doing the reverse invoicing and the buy-initiated invoicing, so that at the very least to our audience, it is clear what action one needs to undertake if they think their businesses will be covered under this scope. So important to dwell on the practicality before we belabor the point of our discussion. Ken.
Yeah, just to recap, buy-initiated invoicing and reverse invoicing achieve the same thing, but take different approaches. So with reverse invoicing, a buyer can issue an invoice on behalf of a supplier, but they only need a one-time consent from the supplier, and they can issue invoices. It's a more involving process. You need approval from KRA. But the whole idea is that once you have that approval, then you can issue invoices automatically without the supplier having to approve that transaction each and every time. Buy initiated is the same objective, but the difference is the supplier approves each and every invoice. So anytime you wish to issue that invoice with them as the supplier or the person giving you goods or services, they have to explicitly approve before the transaction or the electronic invoice can be processed. Important thing is you need to then decide what makes most business sense or best business sense for you. So reverse invoicing is more useful for people who have a contractual relationship or an ongoing relationship between buyer and supplier, and you can show that there's a regular payment you make. Buy initiated is more useful for one-off or irregular transactions, or if you have suppliers who are ad hoc and maybe they don't always issue you the same goods or service, or different people issue the same goods or service, so there's no contractual relationship. The way to think about it is you need to invest time, effort, and resources if you want to get reverse invoicing, in the sense that you need to set a business case, you need to engage KRA, and then they'll direct you appropriately on what the requirements will be. And they need to also audit and assess the system. That's the difference, and that's what reverse invoicing is vis-a-vis by initiated invoicing.
So I hope that is clear to the audience. And looking at these two mechanisms and the suppliers within the scope would obviously be businesses or people doing business within the scope of micro, small, and medium enterprises. So the concern is looking at the historical perspectives in terms of taxes. Many Kenyans operating within that scope of micro, small, and medium have always been shy or tried to dodge, if I would say, to dodge the taxman. Now, with this mandatory electronic invoicing and now introduction of reverse and buyer-initiated invoicing, are we likely to see a situation where many people within the scope of micro, small, and medium and not be ready to implement or to be on board eTIMS for the fear that finally the taxman has caught up with them and there will be visibility on their business operations? So question one, is it true there is fear that these enterprises feel exposed to the taxman? And question number two, is it possible or likely that these businesses operating within that scope are likely to lose business to organizations or enterprises that are more formalized? And that will be answered from a perspective of your experience in rolling out the eTIMS. Then
maybe I'll answer the second question first. One of the reasons I believe this was done the way it was in Kenya, targeting everyone, is so that no one is denied a business opportunity on the basis that they are informal or small or not a part of the tax ecosystem. Or if, as you're aware, for some business interactions or even to qualify as a supplier, you need a tax clearance certificate or you need to show you're in good standing with the Kenya Revenue Authority. So one of the things that, of course, would quickly happen if it's not a structured process, there are many people who would actually lose a business opportunity. So if I'm a delivery rider, for example, and I deal with, let me use the example of a lawyer for a law firm, because a lot of letters are moved back and forth. If this then law firm is required to be compliant and they're dealing with an individual or a business that's not compliant, then they have a decision to make in the sense that, do I work with you and then lose out on being able to claim my expenses? Or do I insist that you are compliant before I do business with you? And so you find that in very many cases, people opt to then be compliant so that they don't lose out on the business opportunity. Of course, it also must be mentioned that there's a very big tax gap in Kenya. Tax gap is essentially the estimation of what should be collected vis-a-vis what's actually being collected. And there are many studies that have been done. Some are online, or these are things that are easily researchable. But it's estimated Kenya only collects 50% of its tax potential. So when you hear we've collected 2 trillion or whatever the number is, it's estimated another 2 trillion is out there. And the invoicing was a way to address some of those gaps. The other thing that also was important here is, from a policy standpoint, widening the tax net is something the government has felt is important. And when you analyze the structures of how tax is collected, you find a very large proportion of taxes is collected by the formal sector or those who are employed, or those who have the means and the mechanisms to use technology to pay taxes. So by introducing electronic invoicing and making it as available as it is, the whole idea is no one should be unable to pay tax on the account of a technology gap or a technology cost or a compliance cost for that matter. So taking all that into account, then you find the way invoicing has been rolled out was also to ensure that everyone can participate in the new way of essentially recording and realizing tax receipts. Now, the other thing, Joe, is when you think through business and the need to be compliant, one of the things that one also has to recognize is the whole idea around missing invoices, or what they call missing trader, is the fact that sometimes you can trade with an entity that does not exist or shut down, or you're doing phantom trading with yourself. Or you go and you set up a company. This company's only job is to issue tax invoices and essentially use that to offset any tax obligation you may have with the actual entity that you trade with. Electronic invoicing was also a way to bring visibility, because you can set up a company, trade with it, claim tax invoices, but you can't audit. But then with electronic invoicing, since our data is being transmitted to the government in real time, the whole idea then was these people who have essentially short-circuited the system, it's easier to see where the potential issue is and address that issue before it's too late. Tied to the other point around addressing the tax gap and the maneuvers people take to actually avoid paying taxes. So I hope those answers your questions and gives more clarity on why.
So when you look at the practicality of enforcing buyer-initiated invoicing and the reverse invoicing, is the obvious pain point of getting the consent or approval from the supplier, right? So you are not in control whether the supplier will consent and give an approval for the invoice to go through. Comparing that to eTIMS, why do you think KRA put that control measure that a supplier has to give a formal approval or consent for the reverse and the buyer-initiated invoicing?
A couple of reasons, but the most important one is ensuring the system is not abused or misused. Let me do this by way of example. So say I'm a farmer and I supply milk to a SACCO or a milk processor. Now, if that milk processor issues a reverse invoice, it means that obligation will be to the farmer to pay the tax accruing from that transaction. Remember, as individuals or someone who's non-salaried, you also have to do annual returns and pay tax on any profit you have realized as an individual. And profit in this case is, this was my income, these are my expenses, and this is the tax I should pay. So that applies to individuals as well. So if this system is abused, or a company feels that it wants to increase its expenses or electronic invoice receipts for purchases to have a lower tax bill, they can easily go and generate fictitious invoices without the knowledge of the supplier. And of course, now the supplier has a tax obligation, a higher tax obligation than they're expecting, and an unscrupulous buyer has reduced their tax obligation by exploiting reverse invoicing. Now, buyer initiated is a lot more difficult because the supplier has to approve each and every transaction. So they'll always be aware that they're approving the transaction. Before reverse invoicing and buyer initiated, what some businesses were doing, they were insisting on the electronic tax invoice before payment. So it became like a document or a process crucial to payment. So for those of you who are familiar with accounting terms, there's this thing called three-way matching where you must see the goods, you must see purchase order, and you must see the goods received note to actually process the payment. But now businesses started introducing four-way matching by also introducing the electronic tax invoice. Because once that payment is made, they have to ensure that they can validate and vouch for the fact that it has actually been processed. So that ended up being one of the things that was really crucial in getting the design of the process right and making sure that no one short circuits the process or the system. And that's why there's this very rigorous approval process around reverse invoicing. For buyer initiated, it's more straightforward, but of course it's more time consuming because if you're doing it, you have to upload it onto a citizen. And the supplier will get notified, but then have to find time, approve, and then you also have to go and check whether they have approved. However, if you want a more streamlined process or if you feel reverse invoicing is worth the investment and the effort of getting approval, and then that works for you. The other reasons, of course, not everyone has the same level of technology.
We're talking about the challenge of getting consent from the supplier. But then looking at what has been the case for eTIMS, there's no control in terms of possibility of the system being abused. And in my day-to-day tax practice, I have encountered a situation where a supplier maliciously issues a credit note against one of their buyers for a transaction that never happened. And the obvious reason would be to reduce the output VAT payable in that month. So looking at it as I try to prevent abuse on the reverse invoicing, the question to you, Kane, is do you think they need to also come up with a solution to also protect taxpayers and customers from fictitious invoicing or credit invoice generation from suppliers out to reduce their tax bill?
That's an issue we have actually come across. Of course, with electronic tax invoicing, the important principle is who generates the invoice and why. Of course, if I'm selling you something, the normal channel is I generate the invoice and issue it to you as a buyer so that you can claim that. Of course, the issue becomes if the seller or the supplier decides to issue a credit note. But I believe there's a very simple remedy for that. One of two ways. One is buyer can always be notified if a credit note is issued. Or in the alternative, they can be requested to approve the credit note once they have been indicated as a buyer. Because as you've mentioned, that has the implication of affecting their output VAT and hence the tax that they pay. It's interesting you raise that point because reverse invoicing, there's some people who are keen on it for this reason. They want to be in control of the transaction because they don't want someone issuing a credit note without their knowledge. Or they don't want to be surprised when they're filing and they realize there's a missing transaction. And some people have actually taken the point of view that reverse invoicing will help minimize or reduce exposure because it's more secure. I use secure in quotes here, the normal invoicing, because I have full visibility and I have control if a reversal needs to be done. But I would say those are the two ways to cure it: notifying the buyer, requiring approval from the buyer. In the alternative, buyer-initiated invoicing or reverse invoicing can also achieve or cure that issue. It can achieve the same objective.
Thank you, Ken, for that response. And I believe if there are any officers or regulators joining us today, they need to think of a way of protecting taxpayers from abuse of eTIMS in terms of credit note generation. Obviously, that means that the buyer ends up with a situation where their input VAT is due, and so they end up with a higher VAT payable. As we wind down to the end of our discussion and looking at the future of electronic invoicing, Kane, maybe you can give us your thoughts on what you expect or how you expect electronic invoicing to evolve, also considering the reverse invoicing or other mechanisms that you think may come up in the future.
I think we're in the very early stages of what technology can do in terms of streamlining not just electronic tax invoicing, tax administration more broadly. E-invoicing is, for me, just but one step in that journey. But when you think about your journey as a taxpayer, all the things you have to do to be essentially compliant, I see more and more opportunities down the road in the sense that right now we just use electronic tax invoicing for receipts and issuing invoices for transactions. Or you could always envision a scenario where the whole life cycle of also reporting and paying is streamlined and also further digitized from where it is today. And today, you may use one solution for eTIMS, you then go into iTax to do another thing. I believe for those who are property owners, there's a new portal or a new system for that. But many taxpayers, I think, are yearning for an all-in-one system where they can do all their tax matters or handle all their tax matters within a single platform. I think that's an area that I see happening across many countries and many governments investing in that down the road. The other area is what this can do for you from a business standpoint. You can always think of tax compliance as something you have to do as a chore, or you can ask yourself, what is the advantage of being fully compliant? Because many businesses are now taking the position that I need to have comfort that I'm dealing with a business or a taxpayer who's actively compliant and will not give me a headache. And I think more and more that will become a differentiating factor. We may have the best service, the best products, or the best solution. But beyond that, it is what is your business hygiene? Are you fully tax compliant? Will you issue an invoice when I ask you? Are you fit for purpose? Are you fully compliant? Because if you're fully compliant in tax matters, it means you're likely to give me an ideal service. If there are question marks around your compliance or your inability to generate an invoice, then I may have a question mark on whether you'll deliver what you promised you will deliver. So it's also like a hygiene and a brand building measure, if I can call it that. And then, of course, finally, I would say for the accountants or the tax professionals or the auditors, electronic invoicing is a way to really help you streamline. For those of you who've engaged with an auditor, especially when you're filing, there's always a bit of back and forth around providing paperwork, ensuring you have all the documentation. It may not be such a big thing for big companies because they have the resources to invest in sophisticated systems. The MSME and the smaller entities, this is normally a time-consuming effort, but if you make the right investments in being compliant, it means all your records are there and makes the whole process around being compliant and able to file and do your returns much, much faster a reality because you've invested in ensuring that you're fully compliant and each and every invoice is receipted and accounted for. So you may find that for an audit, of course, it makes their work easier, but if you know anything about auditing, a big function of the bill is time or how much effort is taken to prepare the books. So if you're helping them by being compliant, you may even find with time, your cost of auditing or any service you need to do to file your returns becomes a much faster and over time a much cheaper exercise. So those are some of my thoughts on where the space is going, but also how you can take advantage of what's there right now.
Thank you, Kane, for that. And ladies and gentlemen, I know we've tackled most of the pain points in terms of implementation of reverse invoicing and buyer-initiated invoicing and just getting to understand what this tool entails. And thank you for staying tuned to the end. So as we get to the end, my final question to you, Kane, would be, and I know we've talked about these mechanisms that the KRA and regulators are putting in place are important to bring them into a formalized business and also give them visibility on how their business is evolving. Maybe now you're cutting short to KRA and to the regulators. What would you wish them to do differently or to improve on to make this process less painful and seamless for all taxpayers?
I can look at it both as a licensed integrator, but also as a taxpayer, because we're in business. Of course, the one request I usually see on social media is whether more solutions can be afforded in the market or whether there's scope or opportunity for more innovation. Because I think the way people in technology think about opportunity is if you give us the raw ingredients, we can then take that and come up with a recipe and have a very interesting and beautiful outcome. So the ingredients in this case is what we're really talking about. The ability to build on top of the systems, the information, the capabilities that they would provide, and then provide market solutions. And that's always a story of innovation. It's about stretching something to its maximum potential. And the other thing I'd also say is for taxpayers, a lot of them are still keen on understanding more. There's a lot of nuance and there's a lot of things, of course, you want to get right. Some also want to think through the best way to be compliant. I know a lot has been done in terms of webinars and general information, but the thing I've also learned from running a business, there is never a point you want to stop or it's never enough. When you think about the big companies and the big brands, virtually every Kenyan knows about Safaricom, for example, but they never stop advertising, they never stop having a presence, they never stop being visible to their customers. And I think more broadly speaking, in terms of electronic tax invoicing and tax matters in general, the more one can be visible, the better. So those would be my thoughts on things that one can do differently, but that applies to everyone, not just KRA as well.
Thank you, Ken, for your informative and part in short, employing the regulators to be more involved and also the benefit that the taxpayers get to enjoy by being positive and in terms of onboarding to this mechanism that KRA has put in place. And important to note that we have people also from the Revenue Authority who have joined with us. And ladies and gentlemen, that brings us to the end of our spaces this evening. So I wish you a good evening and remain more compliant. And we hope that in this year, 2026, more taxpayers will be positive in engaging on these tax discussions.